Have a listen to this. Have a listen to this.
Now, that kind of talk this week dragged Australia's share market to a two-year low. There are, of course, complex reasons for that.
He was the big spender. Right. The big spender.
Doing the grocery shopping could take a huge chunk out of the family budget.
And that's finance.
Hello, welcome to Comedian versus Economist. We demystify the world of money and help you get a handle on the bigger picture. My name's Adam and I'm joined as always by my little older brother and real-life economist, Thomas. Hi, Thomas.
Yeah, good, Adam. How you doing?
I'm very well, thank you. Now, big week on the show. We're going to cover off what on earth has happened to all my crypto. So I need some help, Tom. I need some help. Facebook apparently aren't paying enough tax. Pauline Hanson is blocking responsible lending legislation. And apparently we're now bribing people to come back to the office, of all things. But first, Thomas, before we get to all of that, I want to ask you, do you think the golden age of COVID is over? And when I say that, I mean the investing boom that seemed to come off the back of the big COVID trough. It all sort of went up and now it's all heading back down again. Most notably, Kogan this week has come crashing back down to earth.
Didn't Kogan have a shocker?
Oh, dizzying highs through COVID. And now they've sort of come crashing back down to earth. And I just wondered, is this a Kogan related thing, or is this more of a correction after the craziness of COVID?
Yeah, it's a little bit column A, a little bit column B. I've read a few analysts calling this the amphetamine cycle that we've seen.
Is that what we were all on?
Well, there's a really sharp. We've gone through a full market cycle, which usually takes years to play out in sort of 18 months. There's sort of like the crash, the rebound, the blow off, the consolidation, back to sort of where we are now. So things sort of have moved very, very quickly. And I think the COVID story is part of that. And that's feeding into what's happening with Kogan. Is like there was a big adjustment early on and then a quick normalization that followed. Kogan, I think, did seem to overplay their hand. They were talking about a once in a century opportunity.
Yeah.
Turns out it wasn't.
Well, it was. If they just overcapitalized a bit, didn't they? They go out and hire a bunch of people. They expanded. Kind of like, they just kind of committed to this being the new normal. And then we went, we're getting on top of it now.
I mean, their sales boomed early on, but I think that was a bit of a lockdown effect with people staying home and needing to, fit out wanting their large screen TVs. People needed to fit out their home offices, that sort of thing. And because there's no, physical retail, they went online and bought that stuff. So it was a boom for Kogan in those early days. I think what they did is then looked at that and went like, okay, this is the paradigm shift to retail, to online retail. In-store retail is dead. From here on in, it's all online retail. And this is what the future looks like. And then they did all of their projections and their plannings based on that assumption, which meant they bought a huge bunch of stock. So they got a huge inventory and they went and it started expanding their warehousing and all this to deal with this anticipated boom in demand. But that seems to have tapered. The demand side doesn't seem to have come through as much as they were expecting.
But they're back down. They're back down lower than they were pre-COVID. Is that just taking into account the fact that they did spend too much and now they're kind of in a hole? I mean, not in a hole. They got heaps of money. They're still pretty massive, I think. But
yeah, I mean, yeah, they've got challenges now. They've got. Well, I forget the term now. Demerge or whatever it is. It's a funny word, but they've
demerger.
No, not a demerger.
Oh, that's the only word I know that sounds like that.
It's a fee you have to pay when your stuff is stuck on the docks and you haven't moved it to your warehouses yet.
Ah.
So they've bought up a whole bunch of stuff from China and wherever, and it's now stuck at the docks, but they haven't built enough warehouse space yet, and the warehouse space hasn't come online enough. And so they're now effectively paying rental space at the docks for their gear. And that was a huge expense.
Send a heap of those Go boxes there or whatever they're called, those little portable storage units.
Can we just put these up here, guys? Yeah. Yeah.
Yeah, right.
Yeah, and plus the costs are rising. Like the consumer goods prices going up. There's micro shortage of chips, and electronic good prices are going up. So their margins are getting squeezed. So they're copping it on a few fronts. So they've expanded rapidly. It hasn't been a smooth expansion. I don't know. I'm guessing they've gone into debt to sort of fund that expansion. Yeah, and it hasn't sort of played out well. So maybe they are in a worse position than they were pre-COVID, and the share price is reflecting that. But let's not. I mean, you shouldn't probably get too caught up on minute-to-minute movements. What's?
I'm all about the minute-to-minute movements.
Was it?
I must check myself.
There's Benjamin's great line. Like, in the short run, the stock market is a voting machine, and in the long run, it's a weighing machine. So like it does a good job in the long run of the share price does a good job in the long run of reflecting a company's value, but in the short run, it's all about popularity.
Right. Yeah. Okay. That's interesting. Side note, I did buy into. I was with Kogan, if that's where he was. I bought some. It's an ETF because I like to buy responsibly. Right? I like to diversify my investments because I'm smart like that. So I've picked this online retail ETF in the United States called iBuy, who was just going like through the roof because they were basically just all these online retail companies. And I was on board with Kogan. I was like, this is the paradigm shift to online retail. We're never going back. We've got like pensioners signing up with for new internet connections at their house just so they can shop online. They've never been online before. They're buying TVs and couches, and I was like, we're not going back from this, But turned out we went back from that. That ETF is now fair way down off where it peaked. That's for sure.
Yeah, but it's still up.
Yeah,
like I got in on that one as well. It's
on my recommendation, wasn't it?
Yeah, it's done pretty well.
That's right.
It was. Yeah,
that's right.
Yeah. I think it has accelerated a bunch of changes that are permanent. But I think that the mistake was that people thought that the boom in demand that happened was a sort of a COVID lockdown story, and people went, okay, I'm using this opportunity to sort out my tech gear and get the new TV and all of that. So it pulled forward a bunch of demand. That'll sort of smooth out. But I think in the long run, it has created a permanent shift in the way we do stuff. So I'm hodling that one.
You're hodling that. Well, speaking of hodling, Thomas, a lot of people are hodling this week because crypto, and we can talk about Bitcoin. Bitcoin tanked over the past few days. I think it's down hovering around $32,000, I think was the last number I heard out of the US. It was up, 60,000, 70,000 at one point?
Giving it a nudge, yeah.
So 30 odd percent at least it's come down from. The question is, Thomas, what do I do now?
Look, I reckon. So this all. I mean, the ridiculousness of this is it started with Elon Musk tweeting that you can now no longer buy a Tesla with Bitcoin. So that window of opportunity to buy Tesla with a Bitcoin was all of about 2 months. It's now closed, and that's caused the market to crash. But I think. And there was some regulation out of China.
Is that just so he could focus his efforts on the Doge rocket to the moon? Is it like there's a spaceship he was building as well? Fair enough. He can't be managing selling Teslas with Bitcoin and building a space rocket out of Dogecoin.
Yeah. Oh no. Can you imagine being Tesla's CFO? Just comes down from the top. I want you to buy $1.5 billion worth of Bitcoin. So, okay, that's a lot. It's like, I'm going to tweet and crash the Bitcoin market. And you go, what? Can you wait till I offload some of this? No, we're not allowed to sell it. I'm tweeting that too.
And then this afternoon, we're building a spaceship. We're going to pay for it with Doge. What? Where did we get Doge from? Sell some Bitcoin. Yeah, it'd be a nightmare.
Oh man, can you imagine? Yeah. But I think the thing is that Bitcoin has been trading on a promise. The promise that someday it will become either currency or a store of value.
Yep.
But neither of those things are realized yet. You can't really, practically buy anything with Bitcoin. It hasn't been stable enough for long enough to be a store of value. So it's the promise that it's going to be one day be those
It
things.
hasn't been stable at all. Like it. Stable enough for long enough. It hasn't been stable for any longer than about 5 minutes. It plateaued somewhere in 2019 around the bottom there, and after that.
So it's trading on the promise. But now I think Musk has caused everybody to look beyond Bitcoin and saying like there isn't actually a future for Bitcoin.
Well, that's changed his tune though, isn't he? I mean, it was all about the Bitcoin a month ago.
Yeah. But I think it's a sort of, it was a naive view. A lot of people saw it as a naive view. Like, I mean, it's weird backing Dogecoin, which, is he's not backing down on Doge either. So, yeah, who knows what's going on.
He's messing with the markets, surely. It's unregulated. It's the Wild West. And he's doing what he wants. Fair play to him. If I had however many million followers, I'd be tempted to sway the market as well.
Yeah, if you could crash a market 50% with one tweet, as if you wouldn't.
In an unregulated market where there's like there's no one watching over what happens, then. But isn't that part of the issue too, that China's cracking down on it now? So China came out and said they're banning cryptocurrency, which I think they didn't really allow it anyway. But now they're like, nah, it's over.
Yeah, a number of headwinds for Bitcoin, but I think this is a maturation point in the crypto space, to the extent that I think now with Elon Musk looking beyond Bitcoin and going like, okay, I was excited by Bitcoin for a while, but now I see it has these fundamental problems, primarily tied to its proof of work basis, which means it's hugely energy intensive, more energy than Sweden now to run the Bitcoin network. That's not sustainable. And there are already a number of better alternatives. So if you believe there's a crypto future where it's, crypto accounts for the bulk of global commerce, that's not a Bitcoin reality. That's something else. And so now I think the crypto market will transition away from Bitcoin to, this is my bold prediction. I think Bitcoin crashes, and from here, this is the end of Bitcoin. I think Bitcoin peaks. I don't think we get a higher peak than this in Bitcoin. But I don't think this is the end for crypto, and I think we'll move to alternatives to Bitcoin, particularly, and we'll move away from proof of work to something like proof of stake or something like that. And I think that's the next move in the market. That's my prediction. Other bold prediction is I think we'll come back quite quickly. So that in the last crash in 2017, it took three odd years for the market to recover. That crash happened at a time where people didn't know if the market will recover. This time around, I think people do have that expectation because they've seen history play out. They've seen the 2017 crash and rebound. I think now they will expect a crash and a rebound, but that rebound will happen. We're not going to have to wait 3 years for that to happen. I think that'll happen sometime, in the third quarter. That's my other bold prediction.
You did, I think, earlier in the year. I don't know if it was on. Might have been on out. Well, you've been a bear of Bitcoin for as long as it's been around, really. I think you said it was going to go to either was it $5,000? You said at the start of the year. I said
I think I said 5,000 was for Bitcoin was as likely as 100,000.
Oh, well, that's not a bold prediction.
Wow, yeah. Okay, let's say 5,000.
My bold prediction is Bitcoin is going to move. Like, well, yeah.
I have been famously skeptical on Bitcoin, but I stand by it. I feel vindicated.
Before we get to a break, I just did want to talk to you about Facebook's tax situation. Some concerns, Thomas, in taxation circles that maybe Facebook aren't paying enough tax in Australia. Is that fair?
Auditors are grim. They got their grim face on.
No.
Yeah. No, so Facebook Australia paid $20 million tax.
That's a lot.
Yes, it is. But Facebook extracted from the Australian market $700 odd million.
Right.
So of the total revenue that they paid, not a lot coming back to Australia. So they have this reseller agreement effectively where Facebook Australia it collects the revenue for Facebook International or whatever that body is.
Right.
And so it takes the money from Aussie businesses buying ad space, and then on the other side buys that ad space from Facebook International. And so their actual profit on that deal, what they report, isn't very much.
Yeah, right. So they're not alone though, are they? Like, I mean, this is not just Facebook and Facebook ads. This is multinational corporation 101.
Yeah, that's right. Google, Netflix. Yeah, they're all doing this. This is the way it works, and this is why people are sort of a bit upset. This is one of the key factors driving the government's media bargaining code and that sort of push we covered earlier in the year, saying that they derive a lot of value from the Australian market and contribute very little back in return. And the numbers this year paint a similar story, and I think people see those numbers, see how much revenue companies are making out of, Google's numbers are crazy. Like there's $1 billion in revenue out of Australia and $550,000 in tax paid or something like that.
Yeah, wow. I think I read somewhere that Amazon pays $0 in tax in the US. Like it's incredible. I think it's funny. Like you mentioned Netflix. I think you rattled off Netflix in there somewhere, but we get upset about them not paying enough tax, and yet we're all sharing subscriptions.
Yeah, I love the studies. There's 500. What was it? 500,000 subscribers in Australia and 11 million users.
11 million viewers. Yeah.
5 million subscribers and 11 million users.
Yeah. I need the multi-screen viewing one.
Yeah.
How many? Yeah, it's like because I think there's another service that I use which offers, I think, up to 3 screens. But like you can choose. You can have 1 screen, 2 screens, or 3 screens. And this is a sports service. There's only ever 1 screen of sport going on in my house, but the pricing gets more competitive as you add more screens. So, you do the maths. Get a couple of mates. What's funny? Did you see, we're talking about ad revenue. Did you see the FA Cup final by any chance? Did you?
No.
The English FA Cup final. All of a sudden on the advertising billboard on the side was an advertisement, the length of the pitch on the digital advertising for Edith Cowan University.
What was that?
And everyone saw it and they're like, what the hell is Edith Cowan Uni doing advertising at the FA Cup final? Like, this is normally reserved for the kind of Nikes of the world, massive corporations. It's English football's showpiece, the FA Cup final, and there's Edith Cowan Uni. Like, I don't know, tough climate to be attracting international students, I would have thought. But it turns out they just got a really sweet deal on advertising. It was like, email came in, just said, look, we had someone pull the pin on their advertising for the FA Cup final. We've got a spot. If you want it, you can act. And they were like, yep, we're in. Yep.
Wow.
So, because I think they're in Perth, aren't they, Edith Cowan? So, probably closer to the time zone than the rest of Australia at least, but still fair way off. I don't know what their international program's like, but yeah, they just opportunistic advertising. They were just like, yep, sure, screw it, let's do it.
Bang for buck.
All right. Why don't we pause here? We'll grab a quick break from our sponsor this week and be right back with more after this. Welcome back. You're on Comedian versus Economist. And don't forget, you can, of course, always send us an email if you like. CVE@equitymates.com, or head over to the website equitymates.com/CVE. We love getting your feedback and emails. But Thomas, Pauline Hanson's been busy this week. She has blocked some changes to responsible lending legislation. Talk me through that.
Yeah, this is an interesting one. Don't really know where to sort of sit on this one. Like, I think, so she's come out and said she's blocking these changes that the government's trying to push through, and I think that's probably a good thing.
What do we mean when we talk about responsible lending? Yeah,
so there's this National Consumer Credit Protection Act. Which has one of its provisions is responsible lending, and this means that the banks can't lend to consumers more money than they can't put them in more debt than they can handle.
Right.
And if they give a consumer too much debt, then that's on the banks.
Yep.
Does that make sense? So
Yeah.
So a consumer. So it's a funny sort of structure in the sense of like if you falsify all your documents and lie to the bank and beef up your income statements and stuff like that, and the bank goes, okay, we're going to give you heaps of money, and you buy totally speculative high risk apartment or something.
Invest in crypto,
yeah, for example. And you can then, and the bank gives you the money, you can then turn around, theoretically, under this sort of regime, you can then turn around and say like, look, you shouldn't have given me that money.
What?
That was irresponsible of you to give me that money. I clearly wasn't in a position to be able to take on that much debt.
Even if you lied to get it?
I think so, yeah. It puts, I don't know, it's a bit of a grey area. Like it depends on a lot of the context, but it's the responsibility.
Like lying on your CV. It's your fault you gave me the job. I clearly wasn't qualified. I know I said I was. I know my references all stacked up and looked really good, but I made a lot of it up.
Yeah.
Now, if you fire me, that's unfair dismissal.
Clearly, that first reference was my dad.
Yeah.
But it's why the onus is on the banks to check. It's why they need to see all your income statements and go through all your details, because they need to see that you can actually pay back the debt, that you can take this on.
Yeah.
And the onus is on the banks to do all that, to do those checks and to have the right measures in place, because the Credit Act as it stands puts that responsibility onto the banks.
Right. So what's the change?
Well, the government has been trying to change that. The theory, speculation is that at the behest of the banks, that the banks have been pressuring and saying, like, we don't really like this. We don't want to be on the hook for if consumers get into trouble by taking on too much debt. We don't really want that, thanks. Can you change that for us? So the government has been talking this up and trying to, making moves to push this through. The context is interesting because it comes after the Hayne Royal Commission, where the number one recommendation from the Hayne Royal Commission was don't change anything in the National Consumer Credit Protection Act. Number one, 1.1, not just number one, 1.1.
1.1. Look, guys, if you take one thing from this report.
Yeah. It's in bold. It's highlighted in a red box. The NCCP Act should not be amended to alter the obligation to assess unsuitability.
Right. Oh.
So that was the number one recommendation, but the government has ignored that and directly gone against that and has tried to push through the changes to push the responsibility onto consumers.
Well, it was a recommendation anyway. It's not, they just took the recommendation and they said,
a royal commission.
Thank you.
Like if you get,
thanks for your suggestion.
It's a royal commission. The Queen's involved.
We've had a lot of good suggestions. We can't do them all, obviously. So thank you, Hayne, for yours.
Yeah. So when COVID hit, they tried to push it through, saying like we need to get lending going again. We need to get credit flowing. So we need to make it, remove this red tape from the banking regulator. Mortgage lending is booming, by the way. It's at all-time highs. So that rationale has been totally blown out of the water. Yeah, and so they've still been pushing with it. But then this week, Pauline Hanson came out and said that One Nation would not be supporting the changes. So it's now dead in the water. So the government needs 3 of the 5 crossbenchers. So One Nation has 2, so they're out. The Tasmanians, Jackie Lambie, and the South Australian Rex Patrick are saying they're not supporting it either. So it looks like the government's just going to sit on it now and wait till after the next election, see if they can get it through.
Yeah.
So it's an interesting one.
There you go. She's from Queensland, wasn't she, Pauline Hanson?
Yeah.
Wow.
Yeah.
This ties in nicely to my next story. So the Brisbane City Council are trying to get people to come back to work, fill the offices. They've joined up with landlords, building managers and retailers in a push. I think they call it it's a 6-week campaign to try and get people to come back to the office, targeting Fridays. So they've launched this thing called Fridays in the City, and they're trying to give people enough reason to come back in to the office on Friday. I don't know about you, so I go into the office on a Friday as it is at the moment. To me, Friday's an easy sell. I'm in there. It's like there's Friday drinks. It's usually like casual Friday is funny now because everyone's working from home in their in their tracksuit pants and, you know, whatever, if they've even got pants on. I think Casual Friday could well be a chance that they are the most dressed up they've been all week. If they're heading into the office for Casual Friday, then there's a fair chance that's the nicest they've looked all week.
Yeah, shirts tucked in.
They're wearing deodorant.
Shoes.
They've shaved. The Property Council Queensland Director Jen Williams said Fridays has turned into the quietest day of the week as people work from home. I did read some other study that said it was Friday and Monday. Mondays I totally get. I don't want to go into the office on Monday. I have no interest in going in on a Monday if I don't have to. But apparently Tuesday to Thursday is kind of the busier days, and then Friday, presumably because everyone's not really working from home on Friday, they're working from home for some of Friday, and then probably taking fair chunks of Friday off. So they've come up with some incentives to get people back into the office, which good idea. I think it should help people come back in. They're offering things like free breakfast bags. I don't know what's in a breakfast bag. They call it free breakfast bags.
A bag of breakfast.
Bag of breakfast. Doesn't sound like the most gourmet offering. Can I get a doggy bag for that? Well, it's already in a bag, so. Free breakfast bags, coffee, exercise classes. But she also went on to say there are herb plants, juices, and there's even a psychic and tarot readers in one building. Which,
wow.
Strange. I don't know. I guess horses for courses. And she's just like, I predict you'll come back next Friday for the free coffees. I don't know. Do you? I
mean, this follows a move. I don't know if you saw this from Melbourne. So Melbourne CBD introduced FOMO Fridays.
FOMO Fridays, similar sort of concept.
Yeah. They were giving away free donuts. Apparently,
really.
Apparently, that's what sells in Melbourne. Melbourne's a bit, hoity-toity. They don't go for breakfast bags, but they'll take a donut.
Yeah, right.
Yeah. But we know that sort of CBDs are still getting slaughtered. We know traffic is way down. It still hasn't sort of even made back, I think, for like 50% of its pre-COVID levels. So people are still just avoiding the CBDs like the plague. Vacancy rates for office space are through the roof. Yeah, it's still a graveyard in the CBD. It's pretty brutal. So it makes sense trying to bring them back. And bring them back Friday also, like, I think the rationale with Friday is the day where people, office workers, will spend outside the office. So like through the week, they might be bringing their lunch from home and they're going straight home after work. But Friday is the day where they go out for lunch and then stay for drinks after work. And so that Friday would have been far and away the busiest trading day for those support, shops around the CBD offices.
Yeah, totally.
So trying to re-energize the Friday makes sense. But yeah, it's a tough sell, I think.
Yeah, I'll be in there. I'll be in there Fridays. Like, it's not that hard to, like, for me, it's just like you can come in and get away from the house and kids. Perfect. I'm there. Sold. And I'll get coffee and a breakfast bag. This is amazing. Can I come in on Saturday?
Saturdays.
All right. I think we will, on that note, we'll leave it there for this week. Thank you again for tuning in. We really do appreciate listening to the show. Love it if you could go and leave us a review and a rating on iTunes. Big news, massive news. Thomas, we've got an Instagram page now.
Hey,
I knocked an
awesome.
Instagram page together. I felt like such an old man doing it. I was Googling how do you set up an Instagram page for a podcast or for a business, as it were. Not obvious, it's fair to say. I think Facebook could improve their usability a little bit. Facebook owning Instagram, obviously. But anyway, we're up and running. We're away. We have an Instagram page, so hello, fellow children. Be posting
We need to get
lots of your charts, Thomas, which people have been loving on the Equity Mates page. So Yeah.
Oh, I've got hundreds.
Hundreds of charts. That's not how I pictured the marketing campaign for the Instagram page leading with, hey out there, do you like hundreds of charts coming at you? No. Anyway, we'll try and produce entertaining and engaging content for the Instagram page. I don't really know. I'm quite new to this whole space. I haven't. Have you got Instagram?
No, not yet. But I do aspire to be a finfluencer.
A finfluencer.
Yeah, that's what an influencer in the fintech space is called. Finfluencer.
Think of some other names for it. Anyway, so check that out. Check out all the other great shows across Equity Mates Media, of course. But yeah, we'll leave it there for now. Thanks again for your company. We'll see you again next week.
This podcast proudly brought to you by Equity Mates Media. Always remember, all information contained in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, financial, legal, or tax advice. The hosts of Equity Mates are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to our disclaimer page, where you can find resources to search for a registered financial professional near you.